Well, hello there, people. Welcome to another edition of Tip Tuesday. Jeffrey Nance here with you. We're going to try to make this one smoother than we did last week. Sorry about that still. If you weren't with us, I was trying to show my screen. I was going through, we were talking about how to trade a downtrend, and I was having a good old conversation with myself about how to trade the downtrend and forgot to share my screen. So I will be sharing the screen today, and I will make sure that as we go through today's topic, you guys are actually able to follow along. So it ought to make a great deal more sense today. And we'll do that. So, what is today's topic? Well, today's topic, after we learn two things already: how to spot a downtrend. Number two, how do we trade the downtrend? Today's topic is going to be how do we know when to stop out of a trade on a downtrend? So, we are looking for opportunities to make money when the stock market goes down. Most people are not even aware that this is a possibility, let alone having the knowledge of how to do that. So, as we've been kind of going through this topic, we've been showing you a little bit about how that would work. Now, obviously, you would have to have access to some sort of bearish strategy. That could be through buying puts, it could be through any type of put spread, whether that's credit or debit. It could be through shorting stocks. You would obviously have to have some sense of how you would take advantage of a bearish position, but assuming that you've been through some of our more advanced courses, of course, you now have that ability and that knowledge. So, one of the biggest things that we teach from the very beginning of Tradeway is that we want you to win big and lose little. So the real key to winning big and losing little is focusing in on buy points. So if you have a great buy point, and even if the trade doesn't work, but if you have a great buy point and it goes the opposite way, then you can stop out with a minimal expense. If you have a bad buy point, you still could make money, but it'll be less, and then your stop out would be more. And so one of the things that people really struggle with when they begin to trade, and even after they've been trading for quite some time, is just this idea that I should be stopping out of this trade. So we call it a stop loss because you're literally stopping losing. All right. And none of us really like to lose. And so it's frustrating. And then when you take a stop loss, it's also kind of admitting, this trade didn't work like I thought. So now we carry with us this idea like, was it me? Did I misunderstand this pattern? Did I get market tone wrong? Like what happened here? Am I just not very good? Does the stock always just change directions because I get in a trade? We start to kind of have that internal kind of pity me type thing. It's you guys go do the opposite of what I do and you'll make money kind of thing. And it feel we everybody's going to get to that place at some point in their trading. It's very frustrating. But I don't know too many people that haven't had that experience where they're just like, everybody should just do the opposite of me. And then they make a ton of money. So the reality is the stock is going to do whatever the stock is going to do. So once we acknowledge a downtrend, and by the way, if you're wondering, well, why talk about downtrends at this time? Because it just turned into fall. So we were kind of trying to play off the falling leaves, the falling stocks. It was, I thought, kind of clever on our part. So how do we then acknowledge, okay, this is a downtrend and trade that, but then also realize, all right, guys, when a stock breaks through resistance, it's no longer downtrending. So at what point can you feel comfortable taking an expense on that trade? We're actually going to look at three examples today. And I want it to be very, very clear when you should take the stop out here. And again, I'm going to try to make this as simple as possible. One of the things I think that can happen with your overall trading is it can get very complex. You can start to kind of overthink some things. And one of the things we want you to do is just kind of keep it simple. And I really think that if you can keep it simple and just do simple things, then you're really finding the key. Really, I think that is the key, is to realize, all right, this may be complex or maybe a lot going on, but if I can take a bunch of complex stuff, simplify it, and just do really simple things well, I may have a formula here that works really well for a long time. So let's go ahead, start to look at some of these examples. And I hope at least that you guys will see how this makes sense and what you want to do with these trade setups. So as you kind of work your way through these things, what does that look like? And how can you take this information and really use it in a way that makes a lot of sense? So again, what I'm trying to do here with these examples, take some of the guesswork out and really just make this more of, hey, am I going to do this thing or not? And so as we share these examples, let me just talk real briefly about what a stop loss should be. Most people think that stopping out of a trade is about discipline. And indeed, it is certainly a matter of discipline. The Bible does tell us to be self-controlled and alert. For our enemy prowls around like a roaring lion looking for someone to devour. So it's interesting that the Lord links discipline with our ability to withstand attacks from the devil and those on his side. So self-discipline is certainly an important thing. So it is an element of this. But we had a speaker one time that said, you know, when I thought of stopping out of self-discipline, I was like, all right, I need to be more self-disciplined. But then I started to think about it differently, and I started to think about it as a way of integrity. And I said, well, that's interesting. What is he talking about here? So then I listened to him and I said, look, he says, I had a plan. And I said, if the stock did this, I would do this. And if the stock did this, I would do that. So that's my plan. And he said, I started to realize, listen, if I get into a trade and then I don't do what I said I was going to do, then that's not really an issue of discipline. That's a matter of integrity. I'm simply not doing what I said I would do. Oh man, the first time I heard that, I was like, wow, that changes so much, because what's the point of having a plan if we're not going to stick to it? And if we have a plan and we stick to it, then that's really going to simplify our trading. The trade either works and we make money, or the trade doesn't work, but we still made a good decision. So we need to evaluate our trades not so much on emotion, but on whether or not we stuck to our plan and whether or not we showed integrity in keeping that stop loss. Because again, we're going to get kind of confused and kind of get emotional because we're in a trade and we're like, I don't really want to stop out. What if I get out and then it turns the next day? So we're going to have those kind of questions, but that's not really what it's about. It's about whether or not we're going to have the self-discipline to stop out. We're going to have the integrity to keep our word and actually do what we said that we were going to do. So let me go ahead and bring up this screen over here. And as we do this, I want you guys to be able to hopefully see very clearly what we're looking at and also how we should be thinking through these trades. So I think everybody is now seeing this chart over here. This is CRM. We're going to be looking basically from essentially November to March. What you can see over here, I know it's got EMAs. I think I'm going to take the EMAs off for now. So let's do that real quick. Let's take those away. All right. We'll zoom back in here. Now, all we're going to see here on the screen is just simply the stock and the movement. Okay. So the stock, the movement, and our support and resistance line. So I hope it's showing up well enough on your screen. It shows up really well on mine, but I'm trying to see kind of what you're seeing, and hopefully you guys can kind of see here. That's a really strong, solid resistance line. Yes, we have one little opportunity here where it gets slightly above resistance, but for the most part, I mean, hit it and dropped, hit it and dropped, hit it and dropped. All right, so here's where we would be getting into this trade. So again, we're looking at a stock at resistance because we think it's going to drop down here to support. Well, has it done that within this channel? I mean, absolutely. From there, from resistance to support, resistance towards support, resistance to support, resistance down. Now, I didn't quite hit support here either. Maybe that should be like an advanced sign that we should be watching for, but we're not going to get into that just yet. But we would be buying right here. So we're going to go into our bearish trade right here. And now let's talk about how we would trade through this. So what I'm going to do is I'm going to move forward 1 day at a time. And I just want you guys to clearly see here how you should be thinking through whether or not we should stop out. So again, this line is clearly resistance, right? Clearly resistance. So if our whole trade is based on the idea that this is going to be resistance and the stock is going to resist going any higher, and that line is going to push it back down, then if it breaks that line, it's showing a lot of momentum and we should be stopping out of this trade. All right, so let's see what it does. Drops. Yes. All right. That's exactly what we wanted. Fantastic. All right. Well, the next day it opens higher, but still drops. Okay. That's okay. Uh-oh. All right, guys. Now what you can see right here, hopefully on your screen, is that this, all right, is our resistance line. And today we have a candlestick that is now breaking above resistance. So I'll ask you guys real quickly, real simply. Should you stop out now? Should you stop out tomorrow? What is your thought? Like, when are you going to stop out of this trade? So you thought the stock was going to drop, and it did for a couple of days, but now it has turned, it has broken through resistance. How long are you going to stay in this trade? It's clearly not falling anymore. How long are you going to give it? Oh no, you stayed in to see another day. Well, guess what? It moved up $5 more this day. So how long are you going to stay in now? So yesterday it moved up $9.50. Okay, blew through resistance, up $9.50. Today it's up almost $5. That's $14, right, of upward movement, and you were in a bearish position. That's not good. How long are you going to stay in? You say, all right, oh, whoa, there's another $8 move against you guys. Now you have gone, and at this point you have totally blown up the whole idea of win big and lose little, because now you are clearly losing big on this trade. You're losing big. So from a percentage perspective, from a just straight money perspective, this is now a big expense. So let's go back here. Was this a good downtrend? It was fantastic. We had a great support line. We had a great resistance line. We had a great downtrend. Was this a great buy point? It was a fantastic buy point. We got a good move the next day. It opened higher the following day, but still dropped. That's good. Here's where we need to stop out. If not here, certainly the next day, right? And if not, all you're going to do, guys, is put yourself in a position to lose more money. So you say, well, Geoffrey, I would have stopped out. It would have been a loss. Yes, but losing little is better than losing big. Okay. All right. So let's go to our next example here. All right, we'll flip over here to eBay, EBAY. All right. So again, hopefully this shows up really clearly on your screen. You have a very, very solid resistance line. I mean, just running right off of the tops here. And if this is hard to see on your screen, you guys are welcome to go back, plug these in on your own charts. I mean, look at this support line, support, support, support. I mean, a massive wick candlestick up off support. I mean, this line is phenomenal, guys. This is a terrific, terrific downtrend here. I mean, this is just great. It's a great trade setup here. All right, so if we bought at resistance, let's see what it does. Goes down. All right, fantastic. Up. Well, that's not what I wanted to see. Now, it is at that recent low, but is that because of a horizontal line or because of this diagonal support? So now we're kind of confused here. We don't like to be confused, but we are indeed on this one. So let's see what it does the next day. Okay, it goes all the way up to resistance. So now, guys, it is right at our resistance line. Do I want to stop out now? The answer is no. I don't want to stop out now. Why not? It's going against me. Yes, it's going against you, but it's also at resistance. So as long as it's at resistance or below resistance, then I want to, stick with it and at least see if it turns around and works. Okay, guys, the next day, you can barely see it on your screen, but it broke through resistance. So here we are again. We're in a downtrend. We had a fantastic downtrend. We had a fantastic resistance line. We had a fantastic support line. We had a fantastic trend. I mean, everything was lined up. It even dropped significantly the day after we got in. But now it's going against us. Now it broke through resistance. So now we got to make a decision. Are we going to stay in and see the next day? Oh, well, that's another 90 cents. So that's another 90 cents against us. So we're going to see the next day too. Oh, there's another 35 cents again. So now this thing is well past resistance, well past resistance. And you say, Geoffrey, I'm just going to stay in. And I would say, why? Why are you staying in? It's past resistance. It's not falling. That's 5 days in a row. 5 days in a row. 5 days in a row where that stock has gone up and you're in a bearish position. None of this is good, guys. Take the stop out. Take the stop out. And the sooner you can take the stop out, the better. Okay? Less you're going to lose. All right. One last one here. And we'll jump over here to Nvidia. We'll go back a ways here. Okay, so here's Nvidia. We've got our resistance line up here. Okay, it just hit support. So this is right on our support line. So you guys can kind of use this big candlestick right here, okay, as your support line. So now we're near resistance here. Not quite at resistance here, but it does fall really nicely the next day. That's almost an $8 drop right here. So that was a nice time to get in this trade. Oh, wow. What a $16 drop. Yeah. All right. We're getting close to support here. Oh, well, I mean, we almost got to support. We didn't quite get to our support line. It's here, but you can kind of see that we're close. I mean, we're close, you know. All right. So we might even say, well, we could take profits there. That would probably be good. Like we'd be doing really well on that put right there. Let's just say you stayed in. Oh no, $15 move against you the next day. All right. So again, we could take profits here. That would be fine, you know, because it's clearly going against us. But, you know, let's see what happened. All right. So the next day is kind of neutral. Next day's all right too. Oh, there we go. It's working again. Oh. That's not good. That's a $16.50 move against us. Oh no, this is really bad. All right. So now we got in over here and the stock is now over here. It is now breaking through resistance on this day. We've had two now massive candlesticks up. This is not good. Not good at all. Two massive candlesticks up. I guess we could see tomorrow if we just want to lose more money. Yeah, there's another $2.70. You say, well, that's not too bad, Geoffrey. Let's see the next day. Oh, no. That's a $17 move against us. Guys, listen. All of these are showing something very, very clear to us. When you have a very solid resistance line and your downtrend breaks through that very solid resistance line, it's showing you that it has a lot of momentum. The stock is gaining momentum. It's moving up. Don't stick with it. Stop it out. Stop it out. Take as small an expense as you can. Most of the time, I mean, think about the way momentum works. When something starts moving, it starts gaining speed. And when it starts gaining speed, and these stocks are all doing the same thing, they're gaining speed. You might have noticed they all occurred at the same time. That was somewhat purposeful, but also because the market tone changed. So the market tone went from negative to positive. So if you go back to November of 2021, and then you go out to March of 2022, you're going to find a lot of really nice downtrends. But in March of 2022, you're also going to find several downtrends that broke out through resistance. What does that mean? That means the overall market tone, the S&P, changed directions, and a lot of these stocks then followed them, not down any further, but starting to make a move back up. And this move actually happens and stays steady for a good bit of time here. All right. So to stay in a downtrend when the whole market turns, when the stock breaks the resistance, is not good. And we need to discipline ourselves, but also show integrity to say, listen, my goal here is to make money. I'm not going to make money staying in a bearish position while the stock and the entire market are moving against me. So if you have good lines and you have good idea, right? You have a great idea of what you're expecting to see and what this stock is supposed to do. And then the premise for the trade is broken. Your resistance line is, I mean, it's not good anymore. Then you need to be out of that trade, guys. So we can spot downtrends, we can trade downtrends, but we also have to understand in the midst of trading downtrends, we have to be content and ready to stop out of a downtrend if all of a sudden that stock starts to gain serious momentum and it breaks through resistance. Otherwise, we're just going to end up losing more money, and that's not what we're trying to do. All right. So that is our tip for today, guys, how to stop out of a downtrend. So yes, it is great to be able to make money when the market is moving down. It is fantastic to be able to make money, to see patterns, to see them working really well, to see how clear support and resistance are, and how you can really use those lines on a chart to make trading decisions. But we also have to use them to say, you know what, I got to make a decision I'm not really pumped about, but it's better to lose less than it is to lose more. So if we have to stop out of a downtrend, that means that stock is gaining momentum. It likely means the S&P overall market is gaining momentum. We don't want to be in bearish positions when we're fighting the market and it's moving up. So let's go ahead and stop those things out. All right. Well, that is our tip for today. Thank you guys for being with us, and we will see you next time.